Let's talk about stablecoins, a new kind of digital money that's changing the way people think about payments and savings. Imagine having a digital version of the pound or dollar, but instead of carrying it in your wallet, it lives securely on your phone or computer. Stablecoins are designed to work just like the money you use every day, but with the added benefits of speed and convenience that come from being digital. Unlike cryptocurrencies such as Bitcoin or Ethereum, which can rise and fall dramatically in value from one day to the next, stablecoins are built to keep their value steady. This means you don't have to worry about your money suddenly losing value overnight. Most stablecoins are pegged to real-world currencies like the US dollar or the euro. For every stablecoin in circulation, there's usually an equivalent amount of actual money held in a bank account or in safe assets, making sure each coin is backed by something real and tangible. This backing keeps their value stable, so you can use them to pay for coffee, groceries, or even split a bill with friends, just like you would with cash or a debit card, but often faster, and with fewer fees. One of the biggest advantages of stablecoins is how easily they let you send money across borders. Whether you're helping family overseas or paying for services in another country, transactions can happen in minutes, and often cost much less than traditional bank transfers or remittance services. In the world of cryptocurrencies, stablecoins also offer a safe place to park your money. If the market is volatile, you can move your funds into stablecoins to avoid big swings without needing to convert back to regular cash. Think of stablecoins as a bridge between traditional money and the new world of digital finance. They combine the reliability of familiar currencies with the innovation and speed of blockchain technology, making them fast, stable, and accessible to people everywhere. People are starting to use stablecoins for all sorts of things, from shopping online and paying bills, to sending pocket money to kids or supporting family members abroad. Their flexibility is opening up new possibilities for everyday life. That's why stablecoins are attracting so much attention from regulators, banks, and tech innovators. As more people discover their benefits, stablecoins could play a major role in the future of money and global finance. Here's the catch: US tax authorities don't treat stablecoins like cash, even though they're designed to mimic the dollar's value. Instead, they're put in a completely different category when it comes to taxes. The IRS considers stablecoins to be property, not currency. That means every time you use one to buy something, even something as small as a cup of coffee, it's technically a taxable event, just like selling a stock or a piece of real estate. Even if the value of your stablecoin only changed by a fraction of a cent, you're supposed to calculate and report that gain or loss on your taxes. It doesn't matter how tiny the difference is, the rules still apply. Imagine having to keep track of every single coffee, bus fare, or sandwich you buy with stablecoins, just so you can accurately report it to the IRS at the end of the year. For most people, that's a huge hassle. What should be a simple, everyday purchase suddenly turns into a paperwork nightmare, with receipts piling up and tax forms getting more complicated. These tax rules were originally designed for investors trading assets, not for people just trying to buy lunch or pay for a ride to work. The system wasn't built for daily transactions. As a result, using stablecoins for everyday payments is a hassle. It's no wonder most people stick to cash or cards for their daily spending. After all, nobody wants to hire an accountant just to figure out the taxes on their morning latte or sandwich. The extra work just isn't worth it for most folks. This complicated tax treatment is a major barrier to using stablecoins like regular money. It makes what should be a quick, easy payment into something stressful and confusing. That's why lawmakers and regulators are starting to pay attention. They know that if stablecoins are ever going to be used for everyday purchases, the tax rules need to change. Enter the Digital Asset Parity Act, a bill to make stablecoin spending simpler. Its main idea: no capital gains tax on small, everyday stablecoin transactions. If your stablecoin stays within 1% of a dollar, you don't have to report tiny gains or losses. For tax purposes, every coin is just assumed to be worth $1. No more tracking minuscule price changes or reporting dozens of tiny gains. This would make stablecoins practical for daily use, buying coffee, splitting bills, or paying for a taxi. It's a common-sense update for the digital age. Not every digital coin qualifies for this tax break. The Parody Act only covers regulated payment stablecoins. These must be pegged to the US dollar and issued by authorized, regulated companies. The coin must keep its value within 1% of a dollar for at least 95% of trading days each year. Issuers must hold 100% reserves in safe, liquid assets, like cash or US government bonds. Regular audits are required to prove the money's really there. These strict rules weed out unreliable coins and protect consumers. Only the safest, most stable coins get the tax-friendly status. That's how regulators ensure digital dollars are as trustworthy as the real thing. These rules didn't appear overnight. The Genius Act, passed in 2025, created the first federal rulebook for stablecoins. It required stablecoin issuers to back coins one-to-one with high-quality reserves and undergo monthly audits. The act set up both state and federal oversight, letting small issuers start local and moving big ones to federal rules. This foundation made lawmakers comfortable offering tax breaks for regulated stablecoins. Without the Genius Act's safety net, the Parody Act wouldn't be possible. It's a step-by-step approach. First, build trust and safety, then make stablecoins easier to use. The Genius Act built the engine. The Parody Act is turning the key. Together, they're bringing order to digital money. The Parody Act also cleans up other crypto tax rules. It closes the wash sale loophole, stopping investors from selling coins at a loss and buying them back immediately to dodge taxes. Earlier versions proposed a $200 exemption for small transactions, but lawmakers chose the 1% rule instead. This focuses on the stability of the coin, not the size of the purchase. The changes make crypto tax rules fairer and more consistent with traditional finance. By closing loopholes, Congress is making the digital asset space safer and more mature. It's about building a level playing field for everyone. So, what does this mean for you and your everyday finances? Let's break it down in simple terms. If the Parody Act passes, using stablecoins for daily spending could become as easy and routine as swiping your debit card or handing over cash. Imagine buying your morning coffee, groceries, or even splitting a dinner bill with friends, all with a few taps on your phone using digital dollars that are instantly recognized and accepted. No more tax headaches for every small purchase. You wouldn't have to worry about tracking every transaction for tax purposes, making your life a lot simpler when it comes to managing your finances and filing taxes each year. Regulated dollar-backed stablecoins would become the go-to choice for payments, offering the stability of the US dollar with the convenience of digital technology. You'd know your money is safe, reliable, and easy to use. This could push stablecoins into the mainstream, driving innovation and adoption across the country. More businesses would start accepting them, and more people would use them for everything from shopping online to paying rent. Companies would have to meet strict standards or risk being left behind. This means more security and trust for you as a consumer, but also a new era of competition and creativity among payment providers. Lawmakers hope this will keep the US dollar strong in the digital age, ensuring America remains a leader in global finance as money goes digital. For everyday people, it means fast, cheap, and simple payments from your phone, without worrying about taxes or complicated rules. Sending money to family, paying for services, or shopping online could all become smoother and more affordable. A small legal change could unlock a big shift in how we use money, opening the door to a future where digital dollars are as common as cash or credit cards. The future of payments might just be a digital dollar in your pocket, making your wallet lighter, your transactions easier, and your financial life more connected than ever before.